Hello, welcome to another edition of the Stench of Truth. Today I'm going to talk about the miserable, horrible economy. This economy, the stock market in particular, Dow Jones had its worst start for a new year since 1904. NASDAQ had its worst start ever. We are in a recession despite what anybody has to say to the contrary, and it's likely to get worse. The reason this is the case is the legacy of Alan Greenspan, the continued lowering of interest rates over an extended period of time, which while in the short term is good for the credit market, in the long term is very bad for investment in U.S. securities and the U.S. dollar. And that is why we see the dollar at such a low point right now. The dollar is going to continue its slide unless the Fed increases the interest rate. But there we have the quandary. If the Fed increases the interest rate, thus giving investors an incentive to hold on to U.S. securities and the U.S. dollar, and by investors I mean mainly China, which is underwriting a great deal of our debt right now, then we will be precipitating inflation, which of course will mean rampant price rises in consumer goods. What we have right now is more of a stagflation, just like we did back in the 1970s, where commodity prices are very high, most of them artificially so, especially in the case of oil, and gold to a lesser extent. So it may not be a good investment at this point to move into commodities, especially gold, being that the cost of getting in right now is so high. So what's the solution? I don't know, but it's going to be painful, whatever it is. Either the Fed will continue to keep the interest rates stable or lower them in an effort to free up credit so that people can buy things in an effort to ward off inflation, which will further erode the dollar's value, which will further cause a loss of incentive to those who are underwriting our debt, namely China and other foreign countries who have large reserves of U.S. securities, or the Fed increases the interest rate, precipitates inflation, but also at the same time shores up the dollar's foundation and increases the incentive for those who hold U.S. securities. Either one of them is bad, and that's the problem. The failed policies of the previous administration and this administration really has its legacy even further back than that, through the 1980s and into the 70s. But most specifically under Alan Greenspan. So there's no easy solution, and there's no safe bet to go anywhere. But one thing's for sure, with the commodity prices being so high, the stock market is probably not going to be a particularly safe investment for anybody, at least over the median range, I'd say, throughout 2008 and on into 2009 for sure. This is an election year also, which, whether we have an election or not, which is still questionable in my mind, depending on who gets into office and what policies are enacted whenever they do, that's going to impact the market as well. Commodities may not be a safe investment either, because in my view, they're all artificially inflated, especially gold and most especially oil. So, what's the solution? I don't know. There's a big, fat, stinking, smelly problem with this economy. And the administration now has backed itself into a corner and is in a catch-22. Lower interest rates, higher interest rates, both of them have a detrimental effect on the economy in one way or another. And really, there's nothing else they can do one way or the other. Now, Bernanke has already indicated that he may lower interest rates again, which, if he does so, will, in the short term, supposedly, free up credit for consumer spending, which will alleviate inflation. But at the same time, it will erode the dollar and cause further loss of integrity to U.S. securities, which over time is going to be a tremendous problem. So what I see happening is at some point the Fed is going to have to start raising interest rates in order to prevent the dumping of United States securities on the international market. Now, whether that's going to be in the short term or the long term, I don't know, but it's got to happen. Okay? So, might actually be a decent time to get into treasuries in the future. Those treasuries will be worth more in that scenario because the interest rates will go up and you'll get a better return on your investment. But I don't know when that's going to happen. But one thing's for sure is it's going to happen at some point in time. Otherwise, massive foreign investment in this country through our securities is going to be dealt a very heavy blow by people selling off U.S. securities and not funding our debt. Either way, it's bad news. And who's it bad news for? You and me, the regular, average, everyday consumer, because you can bet your bottom dollar that this administration and the one that follows it, if there is even an election this year, will continue the failed policies of the predecessors. And that means they will continue to underwrite and support the corporate fascist state that we live in. Corporations will continue to receive the entire benefit of this economy, while consumers will continue to lose jobs, lose buying power, and have less money to spend on more expensive goods. So, who gets the shaft? You and me again, folks. The regular, average, everyday Joe. That's the only thing that I know for sure. Thank you. Good day.